Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, Chief Technical Analyst with Sticky Trades. And before we get into the content today, I want to first thank you so much for all of your prayers and concerns and questions about what's happened here in our town of Cedar Key with Hurricane Idalia ripping through and creating so much damage. We actually had Governor Ron DeSantis literally land his helicopter right in our backyard. We live on an airport here, and it's a private airport, so they need clearance before they can do that. But I was able to post a video on YouTube of that event as the governor came through to survey the damage. And so, again, thank you so much for those prayers. Now, again, before I get into the market forecast, I thought I'd change things up just a little bit by going through the geopolitical news very quickly. And then I'm going to give you the forecast towards the end so that you can get the good target numbers. And I'm going to try to highlight those on the video for you as each one of those target prices are announced. So starting with some of the geopolitical news and the data that's come out through the Federal Reserve, I wanted to show you this chart right here. This blue line represents job openings, and you can see that from the beginning of the year, we have had a drop in job openings. Now, be very, very careful of how you're reading the economic data as it comes out, because as you'll soon see from the following slides, you're going to see a very high level of revisions coming out that when first released, the numbers tend to favor the market, but the revisions are put out during times that will most likely not affect the price of the market. And again, it's manipulation at its best. But looking at the job openings, you can see that the job openings now have completely inverted the Wilshire 5000. This is a broader based index, obviously 10 times greater than the S&P 500 with regard to numbers of stocks that are being tracked in that index. And you can see that while the Wilshire 5000 is going up, the job openings are dropping. And that is something that every investor should be concerned about, because you can see these gray areas right here on the chart. That are the times when we've had recessions. And so this is a pretty dramatic inversion because we haven't seen anything quite like that. The diversion between the market itself and those job openings are quite wide. And it looks like we are still heading lower as the job openings drop. That's number one. Number two, when I talk about manipulation, well, there it is. It's still alive and kicking, as we've seen huge downward revisions to new home sales this year. And I've said this many times before, in the middle of the night or when the markets are closed, the revisions come out. Doesn't affect the price of the market all that much because no one's paying attention to it at that particular point in time. But here is another one that came up from AP a couple of weeks ago. You can see that economic growth for the last quarter has been revised down to 2.1% annual rate. And again, these revisions come out when the markets are closed, and it therefore does not affect the volatility of the market. And it's very strategic on how they make these revisions. And if you're paying very close attention, you'll see with your own eyes that these revisions are quite common. Now, I'm keeping this geopolitical news very short because I want to get into the content here. This week, there's been 6 more countries that have been invited to join BRICS. This is something that I've been talking about for months now. And with that, there is an assault that is being launched against the US dollar. And the attack on the dollar will most definitely affect us with regard to inflation. I talk about this all the time. And what people don't realize, and I talked about this with some of our investors last night, if you take the entire population of our planet Earth, 50% of the world's population is now positioned or living within a BRICS nation. 50%. And close to 40%, a little bit over 40% of the global GDP is attributed to these nations. So they are looking to isolate the U.S. and run economies that are more or less parallel to, but not dependent upon, the U.S. economy. And you're going to see, and I'll stake my reputation on this, is that when they come out to release a global currency in lieu of the US dollar. The US dollar will lose its status as the global reserve currency. They will delink the dollar from the price of oil per barrel and the cost of oil for us, because these BRICS nations also produce more than 50% of the world's oil and hold more than 50% of the oil supply. So they will be in complete control, and we will have to pay the price, because the price per barrel will go up. We will pay more at the pumps. And if you look at the inflationary data, that does not measure cost of energy and food. And we all know that energy and food plays a big part in our lives with regard to spending power. And as the cost of living goes up, our spending goes down. That in turn takes its toll on the economy. We go into a recession, and possibly a long recession, maybe even a depression. I've said that before. Thank you so much for liking, sharing, and subscribing. Make sure that you click on that notification bell. We've had some people forget to do that, and I get text messages, and I get emails, and I get all kinds of notifications as to where is the market report? Where is the market report? Well, it's on there. If you click on the notification bell, you're going to get a notification when that report is posted, and you'll get it right away. I'm shooting to get these out before 6 p.m. on Fridays, so we get more eyes on that. And again, thank you for sharing on your social media pages. It really means a lot to us. Now, here we go into the meat of the report. Looking at that, yesterday we have a bearish engulfing candle on DIA, and I have my forecast lines already drawn right here for you to save a little bit of time. 345.05 is where I'm going on DIA. I'm looking to the left at these angles here. I'm drawing to the right. I'm being very conservative here in the angle of this downturn that I'm anticipating, but it could be even sooner than that, where we hit that target at 345.05. Looking at IWM, this is a small cap ETF. What do we have? We have a shooting star. Look at that. We hit the upside target on all the markets, by the way. Every one of our upside targets have been hit. The downside targets on the VIX have been hit. Now I'm getting into the forecast for next week, where, remember, Monday is a holiday. And so Tuesday begins the first trading day of the week, and that shortened trading week. Downside target on IWM is 187.78. Look at the stochastic hinging while the CCI is still in an overbought condition. We had a drop in volume yesterday on this shooting star. We have very close to another shooting star. Therefore, I'm going lower on that forecast. Again, 187.78. Look at the Qs. Now, the Qs, I've left my fan lines in place for you here. We hit that upside target right here on the Qs. We are right up against that former number 6 fan line, and I do believe we're going to start to turn lower on the Qs. I'm going hard lower here at 370, 378 on the Qs. And if you take a step back looking at those fan lines, this is what I call the KOD. It's the kiss of death. When you have a price that is failing to get back up on trend, which is this number 6 fan line, which is a more accelerated trend line, then any pullback from that will most likely result in the move back to the next fan line in the sequence. And I tell people all the time, when this fan line is broken, there's now a 90% chance that we will drop to the next fan line in the sequence. And I am not moving from that target. Eventually, I believe that will happen. In the meantime, again, to reiterate, that downside target for QQQ right there is 373.78. Looking at SPY, we have, guess what? A red candle on a drop in volume. So the volume dropping on the way up is bearish. We have the oscillator starting to hinge lower. Stochastic heading lower. CCI is about to cross with a sell signal. Again, our upside target from last week at 443.93 was hit. Where am I going with SPY? I'm going right back to the moving average right there. Target of 444.86. 444.86 for SPY. Now let's talk a little bit about the VIX right here. We hit the downside target on the VIX, and look what we have here. 6, count them, 6 red candles in a row. It's known as a stale red light. I'm going up. I drew this line on Wednesday, and I'm going to keep that target in place for the VIX. I'm going higher on the VIX, and that is 1586. 1586 on the VIX. Look at the stochastic. The stochastic is starting to hinge up. The CCI is already on its way up. That is a positive divergence because look, the VIX has not yet pivoted, but yet the CCI is starting to pivot. This is the second lowest reading on the CCI that we've had all year. Back in late May, we hit that low, and then we had a bounce and eventually higher prices after that CCI bottomed out and pivoted. Again, I want to thank you. Our Sticky Trades YouTube channel is on the rise. We get subscribers each and every week. And in fact, we are now starting to see massive growth in percentages thanks to you sharing and liking, like I said at the beginning of the video. Make sure you stay tuned to Sticky Trades website, stickytrades.com. We have more information coming out, and we are working, get this parents, we're working on a coloring book for kids to teach them candle patterns with a storyline behind it so they will get it. Even as young as 5 years old, these kids will get it. And you, as the parent teaching them, are going to get reinforced with this content, and you're going to learn it in a very fun way, and the kids won't even know they're learning. They're just going to be coloring away. And there are coloring books as they look at the red bears and the green bulls, drawing their lines and having fun in the process. So again, thank you so much for following us here at Sticky Trades, and I'll talk to you on the next publication. So long.